joining in. Wherever you are in the world, if you're watching this live or watching this through the replays. Every Tuesday we come on here 7 p.m. and just talk trading. And the goal for these trading topic Tuesdays is to help you guys. While we go over these different topics, it's to hopefully add value from the moment, like we're hopefully add value to you becoming better in your journey, by the end of the night. And so with that, we're gonna be jumping into a cool topic today. Cool topic with the drivers of the Forex market. And let me jump into my screen share. The drivers of the Forex market. Like, what does that mean, right? The drivers. The Forex market, or even any other market, tonight we're just gonna be focusing on Forex. The examples we're gonna have is gonna be some good stuff, and I feel like after this, hopefully we're gonna have a better scope, better perspective on how these certain events or drivers affect the market. And because we're trading in this market, we need to be aware and present to what price is showing us, and with any trading approach, we're looking for an edge, right? Like, you're in a casino. The casino always has the upper hand over the gamblers. Why is that? Because they're the ones creating a certain environment. They're the ones who probably got the cards all set up to be in favor of the house, right? I don't know, all these little different things. They throw off the feng shui in the freaking rooms, guys, in the baller suites. I've heard stories, But going back to the markets, there's certain things that will happen throughout the year. This year, kicking it off, we've already had a bunch of movements, and we're going to be diving in and showing you guys like what that looks like. How does it translate, right? So what moves the markets? There's many things. There's not one thing. We'll just put that right there. There's not one thing that moves the markets. You're going to see a accumulation of things that moves the market. So we're going to be going over a few points. So right now, let's just start off with the Nfp reports. You're going to hear us talking about this when we jump into our trading weekly watch list. We go over the Forex.com calendar, and it always lists out the different events that's coming up. So non-farm payroll, this payroll, just to summarize it, it's on the first Friday of each month, and we want to see the numbers that come out on here, whether it be an increase, right? An increase in the numbers that kind of gives investors an idea of like, yeah, our economy is expanding in the right way. And so that kind of sets up let me just fix that. The kind of gives a good confidence reading of the market or the current economy, and then it shows that, okay, if the investors are willing to just drive up the market more, is their money being more confident placed in the market or outside of the market? You know what I mean? So this is one of the things that we notice that does happen. It happens every first Friday, and it usually happens, I think, kind of in the morning, I believe. So here's an example in the Euro USD pair back in January this year. So you see the chart here highlighted, and I have a highlighted box, this rectangle, and that's when the NFP report was announced. So at 3:30 a.m. our time, so that's going to be, I think this was daylight savings, so 8:30 p.m., 5 hours. Yeah. So 8:30 a.m. New York time, 3:30 our time. Got this big green spike, right? If you look at before the price action leading up to this announcement, it looks like just normal market actions, nothing crazy. It's just prices chugging along. Looks like it's having a bear run here, right? And from From there, boom, you got a spike, and then the following. This is a 5 minute candle, I believe, 5 minute bars, and so a little bit zoomed in more because price will be quicker with these smaller announcements. And then I say small because, like, I guess throughout my experience, I haven't seen any big price movements during NFP reports. I don't know if Reed, have you seen any like large price movements during NFP? Oh, you're muted, bro.
Good call, good catch.
Yeah,
I was gonna say not too much in the current markets, but when I was first starting, I would see a lot of huge wiki movements going up real fast, dropping back down to neutral, basically of where the market started. But yeah, you would have to zoom in more, kind of
yeah,
like how you said, 5 minute, even the 15 minute. Very occasionally does it reach up to the hour, but yeah,
right.
15 minute to an hour
So in
most.
this particular market, the Euro USD, when it hit Friday midnight, price Hawaii Standard Time price was on its way down, and then we had a big spike when the announcement came up, followed by this big red bar that is going the opposite way. So as a trader, you're like, "Oh, what the heck?" The price was on a nice little bear run, and then of course this one spike, the green spike, hits all the stops, probably all the people going short, hits all of them, and then it dumps on them like, "Oh, what the heck, dude?" It just, if you're trading this price action and seeing these bars develop, you're gonna be like, this green bar, you're like, "Oh, dude, I got hit and knocked out all the stops." And then price is like, "Dude, what? It hit all the stops and it's going my way." And then it closes, not significantly lower than the previous low. And then it didn't really do nothing on this third bar. And then boom, it spikes up on their fourth bar. Only to take you out again if you're trying to go long, right? It comes back down, almost touching the close, the low, the previous low. And then momentum, the dust kind of settles. You're going to have these the different price movements during these announcements. So, yeah, this is kind of what happened. And this is over 5, 10, 15, 20, 25, 30. Within an hour, 30 minutes, 45 minutes, you're going to see this up and down movement. And eventually, as you would see, as the price settles, the bulls take control of price. And if, that could be this kind of price movement for me. I've experienced. I would try get in, and I would get whipped out. This would probably be like four losses already.
Mm. When you're first starting, or still like your
Probably.
strategy?
Yeah. Starting out, first year, I wasn't aware of these different events, these drivers in the market, and I would trade this price action, and I would get caught in this whipsaw market, and this would be, dude, it wouldn't be nice, man. It wouldn't feel good. It'll throw me off my game, right? And so that's what these kind of markets, you gotta be very cautious, I guess, or patient more so. I was not patient, therefore I lost.
Lessons learned.
So that's one driver. We got NFP reports. FOMC, Federal Open Market Committee, is a branch of the Federal Reserve System, the Fed, right? And it determines the direction of monetary policy, specifically by directing open market operations. So they're kind of like, they're made of 12 members, 7 members of the board of governors, the president of the Fed. So I think that's Powell, right? Jerome Powell. He's a
Yeah.
presidente. And then you got 4 remaining reserve banking presidents on a rotating basis. So I guess it's a good mix. We got 12 head honchos, and they're kind of controlling the way that the money flows. So I think in businesses you have a CFO, Chief Financial Officer, yeah, and for just picture, the U.S. government has these 12 smart people. Okay, they know their stuff. They know what's going on. The members of the FOMC meet 8 times a year and discuss whether they should be, and they manage the near-term monetary policy. So to have these votes, whether either to buy or sell U.S. government securities to promote growth in the market, right? And so we're gonna see these FOMC announcements. We're gonna see that our forex.com/calendar. That's gonna be a good source to be aware. Get ready for it because that'll happen. So this is what happens. This past January in the forex market, we have the USD yen pair, and this is, I think this might be a 5-minute chart. Yeah, 5-minute chart as well. They had an announcement. I don't know exactly what the outcome of that announcement is, but they announced it at 9 a.m. I think New York time, and you can see it's highlighted in this rectangle as well. Prior to that, we have this slow rise in price. Price is just chugging along, pull back, moving up, pull back. You know what I mean? Then it stays staggered, and then boom, we got a pop. We got a nice big green bar. Then you got 2 red bars following, trying to bring price down, right? So it's just hitting stops left and right, and then boom, it just peaks up again. And this is within an hour of the price action of the announcement, and of course more volume, more volatility, these long wicks. So it's a tricky market, but yet if you're on the right side, you will be able to get some profits, man. It's a real good thing to take advantage of. Don't be scared of it. But this is indirect. This is like indirectly relating the specific announcement, what kind of price action you see here. And this is across the board. This is just one example, USD yen, that I pulled up. There, it happens in the Euro USD, all dollar, all these different things. And
Is it
so,
just US correlated pairs?
from what I seen, um, maybe I think majority it would be USD pairs, but you'll probably have some trickle ripple effects in the other markets, possibly.
Makes sense.
Yeah. World events, dude. So you got the war economy, and everybody knows what's going on. So we got the conflict in Ukraine, right? So the war economy is an organization of the country's production capacity and distribution during a time of conflict. War economy must be able to make substantial adjustments to its consumer production to accommodate the defense production. Pretty much just saying like if you when Russia went into war, they would have to pump up their production and their resources of gas, oil, and whatnot to accommodate their spending in military operations. Same for Ukraine and whoever else is involved, you know. Now this kind of like if the market's being balanced, right, and all of a sudden, boom, all your spending is on missiles, bullets, ammo, whatever, personnel, something's got to compensate for it. So we gotta. That's kind of what you see in during these markets. It's just like an instant thing, you know. Well, I'm sure it doesn't move as fast. Like no one just wakes up and be like, you know what, we're gonna bomb somebody right today. I'm sure it was a bunch of just small little things leading up to this big event, and it just broke out, right? So let's look at that. Let's look at that. So I got the what market is this? I think this is a pound USD. February 22. I think it was, yeah, it was a Wednesday. Freaking Wednesday, the 24th. And this was during after hours. So the New York Stock Exchange has closed. And so I think it was like 4 p.m. our time in the afternoon. So this is overnight hours right here. And so price was consolidating for a good amount, a few days between the 0.1364 and 0.354. And so nothing really like obvious, right? Nothing really crazy. Like you're just seeing, if you're looking at price action, like, oh, boom, we made a new low and we're just strongly trending down. But I noticed this price action, and then news started to come out during like the middle of the drop. So there was kind of lagging. I saw price action move. I remember I was on the charts, and then I saw price action move. I was like, oh, boom, let's go. And then I finally like scrolling through. I'm like, oh, damn, someone just got attacked. And so this was kind of what happened. That initial shock in the market from these attacks. So this is an hour chart. And so this is a good amount of hours, just constantly lower lows, lower lows, lower lows. And it moved quite a bit, like if you look at the amount of the average movement of price prior to this price drop, this move is like a 5, 6, 7 times, like a seven bagger, compared to what it was moving prior. And this is opportunity, guys. It's as traders, right? I think we talked
Yeah, it's
about
sad
this
to
read.
say, but there's opportunity there, right?
This is just a trading standpoint, from a capitalist, opportunistic. We're taking advantage of these moves, and we're not disregarding the fact that yes, there's real world situations happening. We are aware of it, but just coming from a trading standpoint, we're talking about the drivers in the markets, these different influences that drive the market, and war is being one of them. It's been throughout our history. We've had that, and um, it's gonna continue to happen. Not as hopefully not as frequently as before, but this primary example of just what has happened in the recent times. You know,
It's a great example, though.
so that's another driver. So far, we got three drivers: NFPs, FOMC, road events. There's another one. And then so we got another one. Number four, fourth driver, Fed interest rates. So the central bank, they go through, have their meeting of monetary policy, and the board members look at different measures. The one most being related is the interest rate that it will charge on loans and advances to commercial banks. So we hear this a lot, these interest rate term with regarding mortgages, people who are in the market of buying a place. They're like, oh, better go get your mortgage now. Interest rates are at an all-time low. Fast forward these few months, interest rates turned up, and because I think we were like low 3%, or even 2%, and it's really, they call it cheap money. You're borrowing an X amount of money, and the Fed sets a certain number of percent. Be like, you know what? Yeah, we're gonna bring interest rates down to like 2-3% because we want to stimulate more market movement. We want consumers to be confident. We want them to get more loans. They want to, you know what I mean? They're kind of just moving the money, right? And so that's kind of how this interest rate plays out. And so they meet in intervals 5 to 8 weeks, which they announce their latest decision. The rate hike tends to boost local currency as it is understood as a healthy inflation. A rate cut, on the other hand, seen as a sign of economic and inflationary roles, and therefore tends to weaken the local currency, and the attention turns to it's like a domino effect. You know what I mean? With this particular interest rate announcement, and so it affects the whole economy, guys. You know, rates up, rates down. It all has a play in the role of our daily lives, and so here's what it looks like. I have a screenshot. January 2022 pound USD. Like a lot of these things, the Feds are making decisions. So the Fed is particularly with the United States, but yet it is these forex markets, because who, a big driver in these markets are the banks as well, man. So here's a price action that I have highlighted prior. If we're looking at it from a technical standpoint, leading up to this highlighted box, we have sideways movement of the market, and then price continues to range, and all of a sudden, boom, we have this little peak, this green spike, and then price just dumps after that. It's this initial dump. The velocity and the quickness of this drop kind of just shows you what kind of I don't know if the announcement at the time was negative. It looks like, obviously. So it must have been a negative thing, and it affected it, and you see price move there. Has an initial shock, price tries to pull back, and then boom, it just continues on. The momentum is there. So whether you do stay away from this initial shock, that could be wise, right? Let price settle. Price pulls back, could not make a new high. Boom, go short. Go short, go short. So, let me go back to this. Let me jump out of the screen share. I do want to show you one more option. One more example of trading during these markets. Let me just pull up my time frame. Do this. Another big driver, in recent times, the freaking COVID, guys. COVID. So this is a daily chart of the odd Australian dollar USD. And so if I was just to do this whole time for like August, for 6 months, price hasn't really done much. Yeah. And then we finally broke out of this range in the beginning of February. This is February 2020, right? Before the pandemic. Or, well, it was already spreading, but like it hasn't hit like the national big news, you know what I mean? Like of course, Hawaii, we get the late reaction, right? So it was like first or second week of March, then we hit it. So price dropped a little bit, then we pulled back, and in this large daily bar right here, I think that was the one, the 9th of March. That's when the world kind of found out, or just found out of everything, right? Of what's happening. I went short in this market. I think I had a first entry here. I had 4 positions going short. And so 1, 2, 3, 4, 5, 6, 7 days I was holding this market going short, and it was crazy, man. The volatility, it was nuts. So I closed my first position down here because I saw market just this big bar. You got to see these big ass wicks, man. For me, like when I see that kind of price action, I was thinking, okay, you know what? Let me just secure some profits because I think the trend is exhausting. That was my observation at the time. And then initially, then I've just left the rest of the stops up here, right? Just imagine like how much room I gave to breathe in this market. Like, just imagine we're trading. I'm entered in. Boom, makes the low. My stop was at 0.63, man, or 0.62. That's how much room I gave. So like I gave away all this paper profit right here. Why is that? Because the volatility was that huge. So,
what kind of percentage returns did you get on these 4 positions total, Glenn?
That was a
Approximate.
that was a what was that? That was like almost 100% return, man, that month.
on four positions and
Ridiculous, man.
in a week about. Dude, that's insane. Like that's amazing.
It was,
Wow.
it was nuts,
That's
man. It was
incredible.
nuts. It was like, yeah, it was definitely a time. It was like, the Cowboys that gets on the raging bull, man. You don't know what direction, right? You just
Damn, that
wait
was
till that sucker knocks you out, right?
wow. Okay, 2020. Wow, that's yeah, that's incredible.
So going back to the drivers, I mean, we got NFP, non-farm payroll reports. We have FOMC reports when they have their meetings. They have what have we gone over? Wartime events, and then we've gone over
Interest
interest
rates.
rates, and then pandemic. So that's five right now. Five drivers. I mean, I'm sure there's more. Reed, I mean, you probably know there's other ones, right?
Yeah, I was thinking like inflation is one thing that could drive the market, the specific currency up of that country. Certain inflations are different for each country. Um, and then yeah, just what causes that volatility, that volume is it comes down to the human psychology, and that's just fear and greed. And those, underlying all the announcements, coming back to the aspect of the human aspect, it's definitely fear based. Why did there's that saying is be greedy when others are fearful and be fearful when others are greedy. And your odd position was exactly that play. You played on people's fears on of the pandemic. And that's what traders are. We pay, unfortunately, the truth is we make money off of people who can't control their emotions. So that's the question you want to ask yourself, like, am I gonna let another trader win against me or win this trade because I let my emotions get the best of me? And so I think that's another key factor is market sentiment of, is it a fearful time or
Yeah.
is it a good time to buy? And but I mean, of course, that's between you and I, that we could see the emotions play out through the technical analysis.
100%, dude. And let's jump back to the market, right? So we have freaking oil. Everyone's blaming Russia or whoever for the oil to just be jumping. Dude, we have been on an uptrend since May 2020, guys. All that.
Wow. So I mean, again, that's multiple factors. What was in 2020, the pandemic, and then rising inflation, and then we got war, we got new
War
president,
war was
like
on right here. This was war right here. This end, you know. But like what is the driver here? I think price had to just normalize part of right? We
yeah,
were we were at like 20, what was this? $18 a barrel, guys.
yeah.
Ooh.
Wow. And some of these could be like, as far as oil is concerned, just like companies making deals with other companies and countries. And that's what's also driving that price up, is like what's happening behind closed doors that isn't even publicized.
Hmm.
The only way that it's publicized is through that candle chart.
It's true. That is correct. We don't know what kind of side deals these countries got going on in the Middle East. They sitting on
Yeah.
tons of oil, but they're like, you know what, man? I gotta build another gold palace. I'll just raise
Yeah.
the price.
Yeah.
So going
Cut
back
the
to
supply
the
off a bit, squeeze the supply.
squeeze them. Going back to the presentation. So taking advantage of these events, guys. Like when it happens, it's gonna happen. You cannot avoid them. You can't really predict it, right? You have all the talking heads on the news always predicting, okay, yeah, Powell's gonna announce this with the interest rates, blah blah blah. You can't predict it. There's no one thing that drives it. The best thing we can do as traders is to respond to what price is telling you. You want to respond. You don't want to react. A lot of
Yes.
the market movement you're going to see is reaction of the crowd, right? And so we want to keep the risk management as a priority. What does that mean? We have to, when we see markets moving, dumping, or going up, we want to like go all in. No, guys, gotta understand. We have to understand what's happening, what kind of impact that the market has based on this particular announcement. Is it significant? Whatnot. And we have to keep our risk management in a way that we can survive trading to trade another day. Like, we can talk about, oh, dude, I did my analysis. We did the watch list. I know that Wednesday, 9 a.m., there's a FOMC announcement. I'm going to freaking go all in during that time. You know what I mean? Like, yeah, you could be prepared, but, like, that wouldn't be wise, guys. It wouldn't be wise to be like, you know what, I'm going to go through. I'm going to full margin. I'm going to go risk 50% of my account on this one trade because, you know, I'm going to make $1 million. And yes, there has been a guy, a trader in the unknown market wizards who has made I think an 800% gain during one event. Call him the unicorn
Wow.
sniper. You know, he's a
Is that the
one-off.
new market wizards?
Yeah, the new book is called Unknown Market Wizards.
Oh, okay, okay.
Yeah, this one guy I think he trades bonds or something, and he made a
Oh.
ridiculous amount of money, over $1 million off this one trade, one event. And like, if you listen to the story, I don't want to give too much away. He prepared this trade like an athlete would. Just think about what's his name, Usain Bolt, right? He does the 10-second, 8-second sprints, right? He trains 20 years for that short clip. And so that's kind of what this trader has done, you know. So it's not impossible, man. But unicorns,
That's
unicorn trader.
experience. That sounds more like experience. You know when to pull that trigger heavy.
So, and he had two things. He didn't over leverage. I mean, you know what he did? He did kind of press the risk meter, but he was freaking confident in the market.
You'll be confidently wrong too, though, everyone. Just keep that in mind. Don't let the confidence or hubris get to your head. It's good to be confident in your system. That guy was probably confident in his system. Not that like I know I'm right.
He was
More
confident in the
the
system.
more confidence in the system that okay, I planned this trade out. I've seen it happen 9 out of 10 times. I'm gonna go 3/4 leverage here. Let's go.
I think in the book they're talking about he visualized like athletes. He visualized the different outcomes, and he knew exactly what he was going to do. Okay, if outcome A, plan A happens, and I'm going to do this. If plan B happens, I'm going to do that. Price goes against me, I'm going to do that. And so it became more of just a like instant response compared to, oh crap, dude, I'm down 500 grand. What am I gonna do?
Yeah, wow. It's
You
if then statements, right? If
laser
this
focus
happens,
if
then
then.
I take this action.
Mm-hmm. Mm-hmm. Definitely, that's a yeah. That section, that chapter in the book, I forgot what the trader's name was, but very unique, very unique. Even Jack Schwager, he said he has never came across a trader who has his style.
Interesting. So that's like an overall style. It's not just like that one off.
Yeah, it's his style.
Huh.
That's yeah.
Wow.
He goes
Trippy.
after those events, dude. It's crazy.
Wow.
Yeah, yeah.
Baller.
Baller, hell yeah.
That's not my risk appetite right there though.
But yeah, I mean, those are the key drivers, guys. I mean, it's gonna happen. It's good to be aware. It's good to know what is going on in the markets, and most importantly, know what you're gonna do during these market times. You don't have to trade every single event. Matter of fact, I think a lot of some of the like Top Step Trader, if you're going for a funded account, they don't even allow you to trade these events because they know what's gonna happen, and they do it for your own good. I mean, a lot of the traders they're either starting out or they have been trading for a few years. They don't want to allow you to get caught with your pants down, guys, and blow your account over this just like quick 20 minutes of price action.
Yeah, they'll actually like they won't allow you to trade, or they'll give you multiple warnings through emails. And if you actually end up placing a trade, it'll be counted as you broke a rule. Therefore, we take your count away. So just keep an eye on those emails. Keep an eye on what you can and can't do outside of the designated rules that they give you.
Mm-hmm. Mm-hmm. Yeah, it's just going back through the charts. You can put in the screen time and go see, like after the fact, after announcement was done, look back at the price action. Okay, what has price done? You know, and like we were saying, you gotta probably zoom into a 5 minute or 15 minute chart to see the full extent of what has happened during that event because these announcements they're probably speaking for a few minutes, 1 to 2 minutes, Powell, whatever. And traders look for like words, certain words.
Mm.
They'll hit, they'll hit a market order or whatever mid sentence, guys. So that's the kind of stuff that's occurring or going on behind the scenes, you know. I mean, you don't want to get stuck. You're gonna assume, oh yeah, Paul's gonna say, rates are gonna drop. So let me go buy. Let me hit a buy market, and then he doesn't. I mean, he goes on and says something else, and it just like flips your position. So it happens very quick, guys. Very quick.
That's why I would recommend just stay out of the market during that announcement and then enter back in after, or adjust stop losses. Make sure
Yeah.
you remove as much risk as possible during those high volatility announcements.
Yeah, for personally for my style as well. Like if I'm already in a trade, and like say I'm in a trade on in Monday, and in Wednesday is an announcement. Um, a lot of the times, if the market is already moving in my direction in the favor, um, after the announcement, it would be more of a explosive move in my direction. So in my favor. A lot of the times I notice that and be like, oh, is something happening today? Because
Yeah.
there'd be times where I don't see what's happening in the upcoming week. And so during those announcements, if you're on the right side, it'll more so show you that, hey, you made a right decision, you're in the right trade, you're in the right direction.
Yeah, like we've talked about it. Like that's a fundamental announcement, but you're looking at the charts as a technical trader, what
Mm-hmm.
the market's revealing with the price action, and fundamentals really just kind of confirm that or give you that push that hey, yep, the technicals are right. At least according to our strategies.
Yeah, that's 100%. I want to fast go back. I want to pull up another chart. Let me see. Go back to this 4 hour time frame. Oh, that's not. Just share my screen. Here's another event that we know to trade. Where is it? The election, 2016. Yeah.
Oh,
Boom. It's a daily chart. I can't get data for a closer look, but you saw this, and you remember trading this, right, Reed?
yes, absolutely. My
So this is a
hubris.
S and P. This is the S&P chart. This is a daily chart, but you can see, the night of the election, this was November 9th, 2016. This is an overnight session. See, the volume bar was much more higher than the previous bars. And price tried to dump, like, where do we open it? 2137. We hit a low. 100 points. 100 point drop. It was like a V shape. If I was to zoom into like a more like a 5 minute chart or whatever, we're gonna see a V shape. We're gonna see like a crazy drop, 100 points down, and then within the next hour, we're 100 points up and closing even higher. You know what I mean? We closed higher. So we started at 2138, closed at 2160. So yes, it wasn't much of a gain, but like during to get to that point, guys, oh my gosh, man. Big event. And so there are traders like you mentioned, they wait for these times like these. 100 points. Like there's day traders, they're like, "Oh yeah, I just got to make 2 to 4 points and I'll make a few $100. I'm good for the day." Boom. You just wait for this. You take 100 points in one night, guys. Damn, that's vacation money, guys.
Yeah. Yeah.
So that'll be another example of a driver. I mean, that happens every 4 years.
Yeah, elections. Yeah, that's actually a really
Elections.
key
Mm-hmm.
component to
Mm-hmm.
the Forex market. Because
Mm-hmm.
that, yeah, the president of the United States, the biggest superpower in the world, whoever becomes the commander in chief, that's a pretty big repercussions across the world market. So I've learned my lesson in 2016. Just stay out, stay out of the
Yeah.
market. I actually went short, and then just because the market began to move, and I'm like, okay, the first moment that the market begins to move, I'm gonna enter. And yep, I was up a lot, and then I was down even more. So I mean, it happened. I mean, and I was like, I tell this story to Glenn all the time, but I was on the phone with one of my friends. I was telling him, "Are you looking at the market right now? Like, I'm up so much, just kind of like bragging, like this is gonna make my year ready." And then pulled back, lost it, and then also had to confess to that too. I'm like, dude, I was so dumb. Like I knew what I was doing was wrong, but you did it because you want to prove that you could do it, and that's not the way to prove anything. Not
Boom.
a gamble, not a gamble.
Not a gamble, bruh. But yeah, I mean, Drew, if you got any questions, man, regarding these events, how to trade them, how to go about them, feel free type it in the chat or come on.
Ben, are you in any live trades right now?
Me? Yeah.
You want to go over some of
Yeah.
them?
Let's do that. Let's do that. Let me just share my screen, dog. So I like the Dow. I've been in it. They call it, or you can the Dow or US 100 or US 30. Sorry, US 30.
Really, the US 30 is the Dow?
Yeah, it represents the Dow price action. Yeah,
Huh.
crazy,
Today I
right?
learned that.
Boom.
It's
Every day we learning. So 34,477. That's when I got long. It's kind of late, but let's see. First entry. Long here. It's a daily chart. Got a few positions in. Oh, it's alright.
so Drew just responded. He said he's still unable to get in Forex. So
Did it not work? The link? We'll try post another
Forex.
link, dude.
Yeah, yeah. I'll get a link for you, Drew.
Okay.
You could get one. Yeah, you could keep going over that.
Yeah. So what I liked with the Dow, um, we had a drop price move, and then we were consolidating for a nice amount of time. And I just stood on the sidelines, like I don't when prices like this, guys, like it's not a pretty market for me. Yes, there are swings, and you can capitalize on it because like it's a good amount of movement. You know, if you go short here, this is a 4 hour market, 4 hour chart. Go long here, but it gets all choppy. You can definitely take advantage of the smaller moves here because this is a good size range. But I finally, when I saw price finally broke a new high, recent high, I was able to get long here, added a few more positions, and I'm just taking the ride up. One market I just opened up is Euro Pound. Similar thing, you know, price, we hit a low, right? Then we got faked out. All the people who want to try to go low get stopped out. Then we consolidated during this thing. So then this is good exercise. If you like, for those who are watching, if you want to put in some screen time, guys, you know, I think we talk about this in one of our in our course, our trading approach course, how to identify the market conditions. Okay, so like these boxes I just put, like to me right off the bat, these are consolidating sideways markets. I avoid them. I want to get in when the market's moving in either direction, short or long. So with this market, I was able to, and it also, you also got to take it to account what the time frame you're looking at. So if zoom out a daily, you know, of course the consolidation period does get bigger, right? Because we had high and then low, high and low. So I'm taking a long position because we're finally closing above the previous high and we're breaking it out. And so I have another level drawn here at 0.856. We're gonna see if it just stays within this bigger range. We'll see. So for me, that's gonna be a trade to take. What is the other one? Pound Kiwi, I think. Pull it up. Pound Kiwi short. We had a big dump, man. Beginning of February. I don't know. I was not in this market because I was going long, and then it closed out. It was a good ride, and then I didn't see, or I just didn't take advantage of that. You know, it wasn't in my scope. It wasn't in my strategy to go counter. You know, but damn, man, look at this big short. So like all the gains that was made from beginning of 2022, all the gains was done within weeks. Let me see. This move started the 18th. The last half of February, we demolished all the gains, guys. And so momentum for me, I see it broke its previous low, and I have entered short in the market because we just want to go with momentum, you know. And like seeing these big swings, it can be a not so nice setups, you know. Like how do you capitalize on this market? I just go with price, man. See what price is. And then crypto's making its way up. I'm not in this one yet, or I do have a little bit of crypto, but it's making its way. Like I said, you know, highlight the consolidation periods. Price broke out, nice gap up, 47K on the Bitcoin.
Breaking out of that range.
Yeah, it's out of the range, guys. So on the technical standpoint, this is a green light. All go. Systems go. Goodbye, man. Okay. So yeah, I see you got the links in, bro. Good.
Huh?
No, I see you put the links in.
Yeah, I put a Forex, I put Wanda, and I put IC markets. Just different options out there. There are probably many other different options to open up a demo account. I saw that TradingView actually offers a demo service as well. it's not an actual account, but
They do.
you you could get used to trading for sure. I think that's the whole point of demo is you want to get the hang of entering a trade, getting your stop loss right, your risk management down, and learning that
100%
way.
tile. So let me pull that, post that in the chat right here. Tradingview.com/chart. Yeah, I was able to do that too. So let me just do a quick
And that's free, right? That's free
free.
service.
I don't know how long the demo is good for.
Uh,
So where was that thing?
Bottom left, yeah, like bottom area. That's at least that's where I saw it.
This guy trading? No, bottom left. Strategy tester. No, trading panel. Paper trading.
There it
So
is.
hit
Yep.
trading panel and you hit paper trading, and then
No broker. You could open up account.
come on, guys. Maybe I gotta log in. So I guess you gotta log in first. You gotta create a trial with TradingView, and then I think that option should be available. I think, right? I know I did it before. Have a
Yeah.
play account. Yeah,
And yeah, you don't even need a broker. It looked like you just need a trading view account.
just yeah.
30-day trial.
So that's always on the table. Lots of good different options nowadays. But yeah, I mean, it's wind down the conversation. I think this was very, very valuable piece of information that we shared, guys, tonight on the Trading Topic Tuesdays. We do this live every time, every night, 7 p.m. Hawaii Standard Time, every Tuesday actually. Next week we got something cool cooking up. I don't remember what the.
I can't off the top of my head. I don't.
But we will
It's so
bring the
cool.
file. Just show up anyway, guys. Like Rick.
Yeah.
we gonna take care. So on that note, guys, you guys have a wonderful night. Good seeing you, bro. Say hi to the fam, Drew. See you guys. Good night.